In this video, let us see about a limited liability partnership. Limited liability partnership is a partnership in which some or all partners have limited liability. It therefore exhibits the element of partnership and corporation. In a limited liability partnership, one partner is not responsible or liable for another partner's misconduct or negligence. Let us see the salient features of limited liability partnership. Limited liability partnership is a body corporate and legal entity separate from its partners, and it has a perpetual succession. Being the separate legislation, that is Limited Liability Partnership Act 2008, the provision of Indian Partnership Act 1932 are not applicable to limited liability partnership and is regulated by contractual agreement between the partners. Every limited liability partnership shall use the word limited liability partnership or its acronym LLP as a last word of its name. Let us see the composition of limited liability partnership. Every limited liability partnership shall have at least two designated partners being individual, at least one of them being resident in India, and all other partners shall be the agent of the limited liability partnership, but not of other partners. Let us see the need and significance of limited liability partnership. Limited liability partnership is an alternative corporate business vehicle that provides the benefit of limited liability of a company but allows its members the flexibility of organizing their internal management on the basis of mutually arrived agreement, as in the case in the partnership firm. This format would be useful for small and medium enterprise in general and for the enterprises in the service sector in particular. Internationally, limited liability partnership are preferred vehicle of business, particularly for service industries or for activities involving the professionals. Okay, this is what all about limited liability partnership. Next topic that we are moving into is related to primary agricultural credit society. Primary agricultural credit society. What it is all about. Rural cooperative credit system in India is primarily mandated to ensure the flow of credit to the agriculture sector. It comprises both short-term and long-term cooperative credit structures. Short-term cooperative credit structure operates a three-tier system. Primary agricultural credit societies at the village level, central cooperative banks at district level, state cooperative banks at the state level. Primary agricultural credit societies are outside the purview of Banking Regulation Act of 1949, hence not regulated by RBI. State CBs and DCCBs are registered under the purview of State Cooperatives Act of the state concerned and are regulated by Reserve Bank. The powers have been delegated to NABARD under the section 35(6) of the Banking Regulation Act to conduct the inspection of the state and central cooperative banks. Okay, next topic that we are moving into is related to National Asset Reconstruction Company Limited, which has already been incorporated under Companies Act. It will acquire the stressed asset worth about 2 lakh crore from various commercial banks in different phases. Another entity is India Debt Resolution Company Limited, that is IDRCL, which has also set up, will then try to sell the stressed asset in the market. NARCL and IDRCL structures is a new bad bank. To make it work, the government has okayed the use of 30,600 crore to be used as a guarantee. What the program is all about. It will be a 5-year guarantee for National Asset Reconstruction Company Limited, issued security receipts to the banks. Under the mechanism, NARCL, that is National Asset Reconstruction Company Limited, will acquire the stressed asset, making an offer to the lead bank. Private sector asset reconstruction firms, that is ARCs, may also allowed to outbid the NARCL. Separately, public and private lenders would combine forces to set up the Debt Resolution Company, that is IDRCL. India Debt Resolution Company, that is IDRC, that would manage these assets and try to raise their value for final resolution. How it works? A 15% cash payment would be made to the bank based on some valuation, and the rest will be given as security receipts. Okay, once the NARCL and IDRC have finally resolved the asset, the balance 85% held as security receipt would be given to the bank. If the bad bank is unable to sell the bad loan or has to sell it as a loss, then the government guarantee will be invoked, and the difference between the commercial bank was supposed to get and what the bad bank was able to raise will be paid from those 30,600 crore that has been provided by the government. That's all. If you like the video, please do share, like, comment and subscribe. Thank you.